Welcome to our Basic Trading Concepts series. Today, we'll explore the world of brokers, a vital component in the financial markets. Understanding the types of brokers and their functions is crucial for anyone involved in trading and investing. Brokers act as intermediaries between buyers and sellers in the financial markets. They facilitate transactions in stocks, bonds, commodities, and other financial instruments. Let's delve into the different types of brokers and what they do. First, we have full-service brokers. These firms provide a wide range of services, including investment advice, portfolio management, and retirement planning. They cater to clients who seek comprehensive financial guidance and are willing to pay higher fees for personalized service. For example, companies such as Merrill Lynch provide tailor-made investment strategies and financial planning services, in addition to facilitating client trades. Next are discount brokers. These brokers offer a more do-it-yourself approach to investing, providing platforms for clients to make their trades without providing investment advice. They charge lower fees compared to full-service brokers. Companies like E*TRADE and Robinhood are examples of discount brokers, offering user-friendly platforms for individuals to manage their investments with lower commission fees. Closely related to discount brokers are online brokers. They provide electronic trading platforms where investors can buy and sell securities themselves. Online brokers often offer real-time market data, research tools, and educational resources. Brokers like TD Ameritrade and Charles Schwab are examples, offering robust online platforms for active traders and investors. Emerging in the digital age are robo-advisors. These are automated platforms that use algorithms to manage clients' investments. They are ideal for those seeking cost-effective, hands-off investment management. Platforms like Betterment and Wealthfront are examples, offering automated investment services based on individual risk tolerance and financial goals. Lastly, there are specialty brokers, focusing on specific market segments like commodities, forex, or options. These brokers offer specialized expertise and platforms tailored to these markets. For example, a broker like Interactive Brokers offers specialized services for trading in international markets and complex investment vehicles. In summary, brokers play a pivotal role in the financial markets, offering a range of services tailored to different investor needs. From full service to specialized, understanding the types of brokers can help you choose the right one for your investment journey. Exciting topics await in our Basic Trading Concepts series. Join us as we deepen your insights into the financial markets. Don't forget to subscribe to our channel and hit the bell icon so you never miss an update.